Very, very important. There is no ways I can logically do company indices in the 30 minutes that we have together, because predominantly I'll just rush through them and you need to learn how to trade them correctly. Are there any questions around trend lines tonight? Has this become very clear? That means tomorrow, ladies and gentlemen, is our last class of the term. Of the course, sorry, because we just have company indices, then I'll teach you market correlations, which doesn't take time. But we're drawing very near the end of the term. Very, very interesting. Gold is interesting, right? So DXY is making its final way down, right? Hopefully it will find a demand soon enough so that our Euro USDs and all those things can go back to selling, right? But there we go. When DXY is going down, gold goes up, and then the reverse is true. All right. Anyways, I need to get some rest. I am bushed. I hope I was clear and articulate. I can feel my head dropping. Oh yeah, lessons learned from a trading firm that I was with the whole day yesterday, and then some clients I saw today in the morning in PE. There's a trading firm in Cape Town, and I really want you to understand this. And they've got a branch in Joburg. All right, so the Joburg branch was zoomed in, and I was in Cape Town. Alvin, thank you so much for that, man. Like, if I'm ever in Joburg, I promise to let you know, buddy. I promise to let you know. When I travel, though, I'm like zoom. I hardly, almost by design, if I can avoid not spending the night in Joburg, I won't. No offense, I just don't like Joburg. but yeah, I will be circling around quite a bit. But so it's a trading firm, right? I'm ending the class with this so that you really understand that these mistakes that you guys are about to make, companies make them all the time. This thing of retail traders blow accounts, yada 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 yada. It's not just you. During COVID last year, when oil crashed, right? Oil crashed. Why did oil crash? Because all the planes were grounded. Planes were going to be grounded because no one was allowed to travel. No one was allowed to travel because of COVID. So it was a global lockdown at the beginning of the year. COVID, blah, blah, blah. Oil crashed. Also, Russia refused to cut supply, just shot prices down. Cecil, and I guess this recording should not go out because I should not be making fun of clients, but Cecil, floor traders did not hedge. They're in the oil industry. They watched the oil markets crash, and not a single, there are 32, and there are 32 traders, floor traders for Cecil. Not a single one of them remembered to hedge, because when you're invested, remember that thing that I was explaining to you guys in one of my videos when I was explaining how the futures markets work and how the COT report works. That's why when you're looking at the COT report, you just want to know what the large speculators are doing. Because if you look at the commercial, Cecil's commercial. So Cecil's inherent invested interest is they want the price of oil to go up. If they can't get the price of oil up, they can't justify why they're now charging South Africans almost 20 rands a liter of fuel. I mean, if this is not in the book of Revelations for the end of the world, I don't know what this is, right? But anyways, they forgot to hedge. They made the biggest mistake of their life. What's to hedge? If oil is going down and markets are crashing, I better be in a different position, right? A different position. This is why I kept saying throughout the course, keep track of all these assets. Especially Wetzel in module 1, when you see something in 2008 going up, but everything else was falling because there was a crisis, that asset is immune to crashes. That's the asset you want to use to hedge. So as you're selling, because you're very good at spotting that, okay, fine, we're selling now, sell. You also want to be buying things that go up during a crisis. In the events your sell quickly corrects violently, you don't want to start to lose, because now prices turned against you and every pip going up is now a losing trade. You're opposing trades on another asset. So am I coming across clearly? Oil was selling because it was crashing. Basically, Sasol should have been buying gold. In the same equal amount of money they were using to buy oil. Does that make sense? They were just thinking commercial, like, no, let's help oil trying to catch a falling knife. Oh, okay, cool. Oil has fallen from $60 to $40. It's time to buy, right? That's how people navigate the crypto markets. They have no broader conception of right place to buy or not. Oh, God, no, it's dropped to $40 per barrel. It's time to buy, right? So as they are busy buying oil, oil unfortunately keeps falling. So $60 buy is now a loss. $40 buy, $46 buy is now a loss. The $40 buy is now a loss. And now oil is at $35 US. Instead of just focusing on buying a falling knife, they needed a separate asset that was going to hedge them. So if I'm a Sasso and I'm now minus 1 million rands here in oil, hopefully I'm up by 1.5 million rands in gold. So that when I offset, when as a trader I go, you know what, the markets are a little bit weird for me, I'm going to close my trades. There's a 1 million rand loss. Is that a question? Oh, maybe someone's mic just went on. There's a 1 million rand loss in the crashing trade, but there's a $100, $50, whatever, whatever your account is. I'm just talking about the Sasso example here. But it's a 1.5 million rand gold trade that Sasol is holding. So that when you now offset, like me, so when I offset, so if my traders are messing up in the markets, I quickly offset them. I can control every single account from my home here, and I just close you out. And I go, it is better to take the 500,000 rands profit, and 1 million here cancels each other out. This is called hedging. You want to protect yourself in the markets, right? Now, the company that I want to quickly talk to you about. This is the end of the year, so I do these things at the end of the year, right? So these guys lost 18 million rands in trading this year. 18 million rands. Okay, and this was started by 7 of my senior traders. So they came together, right? And they formed their own thing. They lost 18 million rands. It's a lot of money. The whole year, and this is the beauty of that iron discipline. I love to see iron discipline. The whole year, 7. Imagine 7 traders. I mean, just look at your own trading statement and tell me how many trades you've taken this year. You'll be so shocked how many trades you take in a month, busy opening and closing, opening and closing. The whole year, in total, of the 7 senior traders in that firm, the firm that they started, 3 of them are based in Cape Town, 4 based in Joburg, and then they've both got some support staff. But fundamentally, they're trading off the same capital. The whole year, and they learned this from the captain's program. Right, so I see you guys are struggling with your captain's program. I should intervene at some point in time to kind of like reboot it, but it's driven by students. It's definitely kind of driven by me, because I'm already giving you guys signals in the trading plan and war room, saying can't do everything, right? But the whole year, all 7 traders, the 3 guys in Cape Town refused to relocate to Joburg, and the 4 guys in Joburg, and they made it work remotely. The whole year, the guys, it's so big because the whole year, 72 trades were taken. That's crazy. That's good, right? That's 72 trades were taken the whole year. Okay, and it works out to a close average, and I can pull out my notes on my phone because I still have a screenshot of all this stuff. You just give me 2 seconds. It doesn't have to be a perfect representation. Someone's got a question there. Roughly 10 each, but on average, it would be 10 each roughly, but actually one of them only took 3, and then the rest covered, the rest of the thing. And the notes that I want to pull up on my screen grabs here, the guy who took 3 in this firm, all of his 3 trades won, all of them. He only took 3 trades this whole year, and all 3 of his trades were positional trades. So he took them in Jan, and he's still holding. And he closed 2, and then 1 is kind of like broken partial profits. But here's the important part. His trade, sorry, 1 trader, 3 trades. His 3 trades averaged them at 25 million rands. Do you see that? So 7 traders in total together as a group are down for the year in November when we did the assessment now, 18 million rands. But 1 trader who's taken the least amount of trades. So he took governor to governor, clean line, and has just gotten away from trading. I asked him, what did you do? He told me, I did what you said. I read a book. He went on holiday. He traveled quite a bit. He did other things. He didn't mess up his trading plan. These are high-stake traders, guys. I mean, the stop loss value is about 500,000 each, 250,000 rands. There's a serious risk on the table. But he's managed to cover the entire losing, and you will have losing trades. It's normal. It's not, I don't have a holy grail, right? The markets are phenomenally, me second guessing almost 8 million people every day on the intraday trading platforms, almost 2,000 to 3,000 hedge fund companies at any given point in time. You will mess up, but it is this idea of R&R that saved this firm. One trader has bought in 25. So he's already netted this, which means the rest of them, the 6 other traders, everything combined that they've bought in. Remember, one of them is an intraday trader. Most of them are swing traders. They have combined the other 6 together as 6, about 56.5 million rands in profits. If we add these two after the difference of their loss, they're done for the year. They've had a really good year. That is fantastically, amazingly beautiful. And this is my second year with these guys since they actually started getting serious, got registered and all that stuff. Last year, they had 38 million rands in loss, 38. And they kind of like broke almost even. So they ended the year with $6 million profits, and they really couldn't pay themselves bonuses, right? Because a lot of that money for these high stake trades has to go back to the pool, if you think about it. So everyone like really take a lean salary in December last year, which they're traders, and they've also got their own personal accounts. I don't know how those work. I just look at the corporate account, and everyone was happy. This year, from our workshop last year, where I got into their asses and I tore a new one up because some of them are just doing stupid things. All right. Fundamentally, a year later, there's a big difference. The guys who are good at swinging and holding are swinging and holding. The guys who are good at risk-reward ratio of 1:3, using 10 lot size and getting out, even if it's after 3 days, getting out, even if it's after 3 days, are becoming disciplined at that. And that is a true trader's process. You need to do that with your small accounts. Tomorrow, in our last lecture together, I'm going to introduce and teach and conclude on company indices. Company indices are things like NASDAQ, Dow Jones, etc., etc. I don't expect you to trade these things tomorrow because the class is done. I generally beg you guys to stay away from this stuff up until your trader process is awakened. Trading indices, listen to this carefully, is easier than trading forex, technically speaking. Indices are buy profile assets. The year is about to come to an end. All indices are extremely parabolic. There's going to be something that's going to crash the indices. Last year it was COVID. God knows what it will be between December, January, and February. Something's going to just slow them down. They're going to do well, go up. When they crash, we just wait for the bottom. The bottom takes place in 1 to 2 months. We buy like crazy. We hold. It's mathematically, I'll prove it. It is the simplest thing in the world to do. Traders, however, because of indices, the nature of indices is indices move fast. And they move fast, they move violent. And that's why Mr. Ronald was saying, Ronald's been looking at NASDAQ for like a year, but he still finds himself, twisted in the edge to control it. So this is my personal NASDAQ chart. Elon Musk is selling his Tesla shares up there, created some market confusion. Right, so NASDAQ is now responding, but it's a slight drop. I want to show you something, man. I want to show you something. This is COVID last year. That's COVID. Here, February 2020. Right? This is the drop. Lasted 2 months, give or take. This is now March of 2020 with the recovery. All right, and then what happened? Markets went up. So you might not have been able to catch the recovery because you didn't know price was coming there. All right. But I can guarantee you along the way, we've started to realize, oh, okay, market's now recovering. Let's buy. If you had bought there 0.01, listen to me. If you had bought here at 0, if you had, let's say you had 2 accounts, and you bought there at 0.01. Let's say it's a $100 count, all right? And you bought there at 0.01 and you didn't close. You didn't close. You're probably looking at a $10,000 to $15,000 account right now. I don't think you believe me. Maybe I made that number up. Let's see. I think I have a calculator somewhere here, saved somewhere. I just don't know where. A mirror trade. Are you the one? Are you the one? There used to be one that I liked. It's just that all this, nah, it's not going to be here. Because these are currencies. You guys are lucky. It'll just take me forever to find it in my bookmarks. It'll just take me forever to find it. Indices, point calculator, somewhere, man. There's many of them, but there's one that I like. Okay, we can use a Dow Jones value pip calculator. They're not even called pips, they're called points. So that's already worrying. All right, it looks like this. I think it's this one. It looks very much like this. Why the Dow? Oh, there we go. Instrument, let's go to NASDAQ, which would be US 100. All right. How many points? If you it's just we're just trying the stimulation. So let's say you couldn't catch this. So now let's be realistic, right? Let's say you don't know the day the recovery is going to start, but you're going to use supply and demand. I'll teach you what all these lines I've drawn on indices mean and why you draw them and why you need them. It's not support and resistance nonsense. Like, look at this. So the recovery happens, value-based demand. Why? You need down traders, blah, blah, blah. And markets come in here. It's a weird candlestick, a doji candle. We draw all of it. Then markets start to explode. Generally speaking, if you become keen to trade in market conditions, this is the first place I see you entering, in my humble opinion. Why? You have a bearish engulfing pattern and you know it needs to get retested, right? So it gets retested and markets go deeper, then markets create a bearish engulfing pattern. So maybe you missed that. I don't know. Maybe you missed it. If you missed it, another one here. Sorry, bullish engulfing pattern. Right? As markets explode up, markets come back down. Maybe you missed that one. I don't know why you would. If you did, this one would have screwed you over, but markets do give you complicated 365 candles before going up. All right? If you missed these ones and you missed this bullish engulf, I don't know. I don't know what's going on with you now, because then now I don't know what you want, right? As a trader, I don't know what you want. But let's say one of these demands you caught. Let's even use the one higher, the highest one above this. We're going to use this one just to say maybe it took a trader a couple of days to find a good entry point. The best one is down here, especially on H4 time frame. Easy. You'd have found another on the H4. There's so many good ones. But let's just say, as a trader, you got into NASDAQ at around 8,000. When this thing was about 8,000, I need to zoom out a bit. Class is done. I'm just making a point. Why am I making this point, colleagues? It's November. Indices do this every year. It's November. So you can start to prepare an account for this. This is your 365-day account that you don't forget the password. You know, set it up, call a friend to put a password in there, one you trust, one around with your money, or your wife, or your partner, your brother, your sister, someone you stay with, and don't open the trade after a year. Because if I track here, this is February 2020 of NASDAQ, right? This is right. You guys see this is February 2020. Let's find February 2019 if you think I'm lying. January. Oh, this is December, sorry. Oh, so look at me being silly. April. Look at this. This is February 2019, value-based demand. And markets actually were kind enough to come back for you. Down here, you guys can't see. Now you're going to tell me, nah, it shows us things when they're so small. We can't even see if he's telling the truth. There it is. This is March 2019. So January, February, March. Where's February? All of these are February. But if you couldn't get a clear entry, here's one at the beginning of the month of March. Here's another one in May. And markets rallied all the way up to COVID. I can do this year by year. I can track another year. There's never been a time where this index will close, equally from the previous year. Price always goes higher. Annually speaking, markets will close higher. SP 500 known to give 10% because where it opened in January and where it closed in December, opens in the next year, January is always higher. But let's quickly do this exercise together so you can see for yourself that I'm not being facetious. All right, so let's pull out an information line. Why do I want an information line? I want to know exactly the number of points that NASDAQ has gone up by. So I'm going to draw from that area there all the way here. Right, so that's 7,571 points. So I'm going to go NASDAQ. Let's go 0,01. So for NASDAQ and company indices, you must have like $400 US because the areas are very expensive, right? Per point is expensive, right? One trade, I'm going to take one trade and 7,571 points. This is where you put it, 7,571. Like I'm just catching blanks here. So number of pips is 0,01. What's going on here? Right, US 101 pip size. I will correct it when I see the answer because I'm very confused right now. Yeah, so something is wrong. Oh, pips, there we go, 7,571. I did only take one trade at 0,01. So we climbed up 7,571 till today, and we took this trade in May. It seems like in April, sorry. So this is like not even in February. In April this year, 2020. Oh no, April last year, 2020, up until now, which is actually slightly over a year. And you just held it, right? Obviously, markets moved up and down, up and down. But the point is, how much would you have? Really? Oh, goodness gracious. I need to get my old calculator. Something is wrong. This is no way. I refuse to believe this. Let's quickly, can I just quickly read the formula? There we go. Pips value is $100 US is equals to 0,01. All right, that's important for US 0,01. One pip size of $100 US 0,01. So if you have 102, price on today. But how do you use a pip calculator? The number of units per lot, right? So it's 100,000 units per lot. But units per one lot vary on non-forex pairs. I know this. In this field, there's an option called peak value-based trading. So there's an example of 0,10. Okay, I'm going to end class because I don't want to give you guys the wrong answer. If you do a lot of calculations, basically, I need to kind of like figure out how much, I don't know if I'll get a clean answer on Google. How much is 0,01 per point on the NASDAQ? And I used to know all these things by heart. I'm really just wasting your guys' time. One pip of units per NASDAQ, 0,1. So the price moves around. Wait a minute. The 3 represents 3 pips. Yes, I know this, but how much is it? Is it $1 per point? It used to be $1 per point. It's going to take you back to the same calculator. Guys, I've wasted your time. I am so sorry. Pip size 0,01. I don't know. Something is wrong with me, not even the system. Okay, I promise to figure this out, everybody. But my point is, create a second account, units trade. The math is messed up here. Forex pairs, 100% units. Units per one lot vary, Yeah, but that doesn't help me. I just need to know how much it's worth so I can put it in. So I can feed it into the calculator. I can feed it. This is the number of points, pips, 0,01. I don't know. I'll figure it out. I'll have to ask someone. Position calculator. Oh yeah, it's not pips. This is for currencies. I'll figure it out, everybody. I promise to figure it out because it's very important. Tomorrow's our last class. I promise to bring it up tomorrow. Please, can someone remind me? It should, is it, you think it's 1,000? I'm so tempted to agree with you, but I don't remember. 0.01, 1,000 units. Is it 1,000? I don't remember. For the units, yeah. No, I completely understand what you're saying. It's just that I just don't remember if that's it. But anyways, if that's the case, 7571, they used to write it somewhere, man. So anyways, you guys remember our course on risk management, right? So remember, you're always buying units of something, right? So that's why I left this blank just to assess. But 0.01, 1,000, because I know for a standard lot size is 100,000. So I think Nancy is correct. I actually think Nancy is correct. Let me just quickly scroll down here. 100,000 units per one lot size, all right, per standard. So by 1,00. So we are only using 0.01. Nancy, thank you so much for triggering my memory, because that helps a lot. If you just held, if you learn to buy and hold and swing, guys, we'll go now. Look, it's 75,000 US dollars, by the way. Let's not forget about that. Right. So this is the kind of like coaching that some people like Mr. Marks now need. Stop managing NASDAQ. It's a buy profile asset for that reason. You invest in this thing. You can use your trading account to just open a trade, make sure the stop loss is breathable, and then every month you just let it rip. Let it rip. Yeah. This is obviously an offset. Or I won't lie, COVID would have diminish some of your profits, but that would be an opportunity to buy low. Again, everybody thought tech boom was down. Nancy Pelosi was trying to shut down tech giants. All that kind of stuff happened, but it doesn't matter. We're now at the end of the year, and this thing has moved up 7,570 points. All right. This is not the kind of money you're going to make easily in your trading, because you're so emotionally involved. But if you have a second account, the story of 365, everybody, before I go, it's simple. After I finally learned how to trade, my mentor told me to do something like this. And I opened 3 trades and I let them run for 365 days while I was working on my trading. Now that I had information, and I won't lie, it changed my life. So I called it 365. My first million was never overnight. I just let it grow through the market. If you calculate 75,000 US dollars, it's slightly over 1 million rands in South Africa, if it matters to you, all right? But this stuff, easy. I mean, I can show you another trade. I can show you in currencies. Let's go to Euro USD if you want. The thing is, because people forget, like, or traders get so stuck in the time. Euro USD, Pound USD, it does not matter. Honestly, it does not matter. We're drawing trend lines here. It's fine. Let's quickly find the month of January for Euro USD, and then we can work out our supply and demand. So this is what? 2021. September 2020.
Right?
Yes, sir. Go for it. Sorry. There we go. I'm looking at Euro USD. I just want December. Look at this, December. Look what happens in December. Markets come into a supply in December, right? Remember, banks think in 3 months, take profits in 1 year in a 10-year plan, right? You want trades like this. November, December, guys, you want trades like this. You want to start preparing yourself for trades like this. You want to ignore the social media stuff and tell yourself, all right. Where's price going? You see this December? Where does market start in Jan? There. And just like our AUD JPY, do not get stuck out, right? If you're going to take profits because you know that markets have to come for a fresh touch. Don't let all these profits disappear. But if you just had the same trade running, and you say, even if you set through the retracement, this is January 2021, this is where price is today, end of year. So markets move mechanically in order. I'm not saying all charts will start in January, but I'm saying there was 823 pips to get from Euro USD just from, I'm sitting down with corpus, people I've taught. So they've been in your shoes. They didn't do a different type of course. They've just done it, repeated until it sunk in their heads, grown their personal accounts, and then started to pull funds together to grow more money quicker. And all they're doing is waiting for these key areas of value and then holding up until expected end. Let's go to another chart, just another chart. I don't know. Let's go AUD We've done JPY. What AUD? What now? AUD CAD. I don't know. Let's see what's going on there. It won't be the same for everything, but you can definitely get a feeling. This is January. Once you understand risky assets, you know that they all move the same. So all my euros, all my pounds, all my AUDs will move the same. There's another trade that has been moving in the same direction. You guys see this, right? Because on the smaller time frames, oh my God, it went up, it went down, it went up, it went down, it kicked me out. But if you find the absolute true sell point, the absolute true sell point, and the absolute true buy point on any chart, and all you have to do is get out of the way. On the other side of this camera, I've got a big poster, get out of the way, Leroy, out of the way for myself. I literally am the only reason I make money or don't make money. Here, look at that. Markets arrived at a nice, clean supply, complicated candles, the highest candlestick of the day, and markets sold off. That's 789 pips. This is in your currencies. You got 83 something pips on Euro USD, 789 pips on this. You can be adding, after every week when a new supply is formed, but your true sells are what build your equity, and you swing that stuff. You swing it. Last chart before you guys go. Let's go. I don't know. USD something. Let's see what pops up. USD JPY. Let's see what's happening. USD JPY. Monthly time frame. Let's find January 2021. There it is. It's every day. If you look at your charts every day on the city time frames, I swear to God, it's 10 times more confusing. There is Euro USD JPY, month of January, found a bottom into a demand. I don't even think I need to draw it for you guys. There is a clean demand there. Let's see what the candlesticks look like. It's literally a bullish engulfing demand that's still not yet broken. Markets at the beginning of the year in January, markets just stopped caring about the news. What's going on? Is it COVID coming back this year? Delta 3, wave 3? No one cared. This chart told itself, we found the bottom, now we go up. Broke a trend line, which further confirmed we're going all the way up. We are now trying to catch buys here. You see on the trading plan, we've got buys here, buys there, want to buy here, want to buy there, want to buy there. But smart money, long-term perspective traders have been in USD JPY since roughly the 5th or the 6th or the 7th of December. As a 365 trader, maybe you got in somewhere here on the 21st of January. With the H4 time frame, you'd have gotten in here on the 26th of January. With daily time frame drawing a supply error value, you'd have gotten in again on the 23rd of February. There are only a few true buys, swing buys and swing sells, and then all you do is do nothing. Look at my favorite. I've told you guys about this trade, right? I hope I've not lost it now because the tick is so difficult to find. I've lost it. She's gone. Where's my cotton trade? I'd farm my clients for this. I wanted you to see the actual chart that I used. I held this for over a year. It was a good trade. Our supply and demand curve confirmed that I was not crazy. It's just that it's a future. So I don't know if you guys know with the futures charts, there are multiple of them. And I don't want to go through all of them trying to find the right one because I don't remember when the contract started for the futures. But it'll be nice for you to see. There's my analysis. There you are. There you are. April 2020, last year. Price has been going up. November 2021. For the client, I got out somewhere here because it was just the end of the contract. For my personal 365 main account, I'm still holding. I'm still holding cotton. Why am I holding cotton? Supply and demand curve. Remember the supply and demand curve that I told you? We bought cotton with the bulls, 0 to 25%. We bought it at its lowest. We know that markets need to slow. Look at where we are now. We just got past the 50% range. So we should start to take some partial profits and whatever as markets carry all the way up. But we can literally shrink our screens and we can see for a fact that cotton is about to have another good year. But the money it belongs to someone who is building something around their lives. Guys, all I'm asking for, I know this is our last class. I'm just asking you to give my stuff 365 days of your life. I don't know how old you are, but you've done things your way for however old you are. I am asking for one small year of your life. One, just that. And I promise you, the people who give me that, and don't give it to me half-heartedly. Don't give me half following rules half. I'm saying follow my rules through and through. Create a disciplined cycle for 365 days, and you will see it is not, it's the charts, they're there, they're dated, they're time-stamped, everything is right there. You now are capacitated to do this stuff. All right, and I'm really looking forward to all of your growth. But let's catch up tomorrow for our last class together. And again, apologies for South African, on the behalf of the South African government, of all these podcasts that are interfering us. But a good trader who's listening to me right now is going to go do their best to save up a good sum of money. You want money to trade, I agree with you. But you want to be able by January, February to chance the markets, right? And dump them in an index that is not at an all-time high. You don't want that right now, right? You're going to be pulled down to the bottom. It's a trade. So as you get your stop loss hit, you're screwed. Number one. Number two, I need that trader to remember that the bigger the lot size you go into an index, the bigger the margin call and the more you can get screwed. I want you to think about the picture you've seen. Making 75,000 US dollars off 0.01 because you simply held it for 9 months is 5 times easier than making 75,000 US dollars trading every day. I can promise you that, because you are involved in the everyday process. You take 0.01, depending on the capital. If you got $400, 0.01. If you bump it up to about 700 US dollars, you go 0.02. Why? Because you're risking already about 100 to 200 US dollars per point, right? Per area of value on those charts. So if you're wrong on $400, it means you're going to lose 200. So you want to be very well risk. I won't tell you this next year. I might forget. It's nice. It's part of market conditions, not part of my course. And then you hold. You can do whatever you want on the other account. You can blow the other account and then come back. This account, you forget about it. If someone dies in your family, and I'm not trying to be insensitive, I'm telling you that these are the kind of decisions we have to make sometimes as people. The money in account number 2 that is currently accumulating wealth for you is not for that. It's not for a funeral, right? The money, if those of you in Wealthy in 3 Years program, please don't fall for that trap. Life will create pits and circumstances. Make a different plan. Go without. If your car dies, you don't get to go close your Nasdaq trade in June, July, so you can go fix your car. Why? Because if you let your Nasdaq trade run for 9 months, you can buy a car company. You never shift or trade assets for liabilities. Traders, please. So someone, I know there are 15 people in here or 14. I'm looking for 3 people just to do this. And 4 people just to follow my instruction all the way through and tell me that it worked. If you start off with $1,000 US, if you can, even better. You go 0.03 on a true buy. Your analysis for that has to be perfect, because a true buy, you don't want price to come back and find you there. You want price to rally and then create a new order block above you, rally and create another order block above you, rally, and your first month is the hardest month, because in your first month, you want to see a monthly candlestick, start to create momentum on the governing time frame for price to keep going up. It can't be that difficult, because indices are by profile assets, but sometimes within that month, they will look for bottoms, they'll snuff you out. You don't want that. You want a good price. Maybe the good price will come in December. Maybe the good price will come in February, not in January. But a smart trader is watching their charts. I just showed you the same thing in commodities, in cotton, it's there. In gold, it's there. In silver, it's there. I showed you the same thing in the currencies, it's there. You just want that one account that you say, listen, this is my swing account, but not only swing, positional tradings. I buy to hold. This is the one account where I go governor to governor. What does this mean for the trader? It means you're going to pull out the economic calendar. Trust me, this works even better. The economic calendar is where we get to see when the FOMC is talking. A good trader will mark out all the days of the month, every month. This is your routine. Okay, there's going to be an FOMC high impact news on the 11th, on the 12th, and on the 13th. Whatever the days are. those are the days you do not touch the markets. You don't open the markets. You don't follow the news. You don't go add positions. You don't go close positions. You don't go lock profits. You do bloody nothing. Because anytime there's high impact news, you start to drop your perspective of an eagle and you start to face down like a chicken, and you're going to H1, H15, and you start to make commotion. You start to destroy what you've been building for the last 3 months. You simply want to see your account grow. You cash out, I promise you. All right. If there's one sure way, and I don't talk about this in any of our marketing ads, but if there's one sure way of becoming a millionaire, that's your dreams, that's something you've always wanted, in dollars, in rands, in Kenyan shillings, this is the method. I've given you everything. Well, tomorrow I'll have given you everything. Go back, test what I've just said. And you will realize that it's nothing to do with the charts or the markets. The only variable year to year, the only thing that is a variable is something that can't be conditioned. It's a variable, it's random. The only random thing about your trading for the rest of your life is you. You are the variable. My rules are set in stone, and they're not even my rules. It's smart money concepts. Simple. I like to do what these guys do because it's their house. Their rules have been around since the 1935 after the Great Depression, cheered and fundamentally pioneered by Goldman Sachs, but actually every single bank operates that way. So that Goldman Sachs in the 1935s saves America from the worst type of depression ever by fundamentally understanding the psychosis of human beings and investing that way. And slowly but surely, Citibank, Bank of America, and then hedge funds and all these people start to copy this format. And then we start to create giants in the markets that think the same, small group thinking the same, moving markets, right? And since then, the nature of capitalism, which has been around for 200 years, supply and demand was detected. The only way we could know why the price of bread, cooking oil, or sweets go up was supply and demand. So all markets did was incorporate this. All the way there in the East, the Japanese guys create the Japanese candlestick. And the Japanese candlestick, or the candlestick system, was to help the Japanese keep track of the rice markets. So the Europeans take this candlestick system, incorporate 200 years of capitalism plus supply and demand, and we now have our trading system. It's now in the palm of your hands. You know this stuff. Feel free to trade. Feel free to blow your accounts. Feel free to increase your lot size. It's all part of the experience. It's fun, man. It's fun to say I made $1,000 one night taking a risky trade. It's also fun to say I knew what I was doing was wrong and I blew my account. But have a serious account where you just want to slowly, so you get into NASDAQ and you find a true buy, and that true buy holds for a month. And in that one account, you mess around and you get one forex pair in, one good hit on that governing supply, and you say, this one I'm holding for 9 months, and you use a good lot size. Your profits for NASDAQ start to cover you. And then you go, okay, fine, it's still April. All these things need to be hit within the first financial quarter. You've got only those first 3 months to shape up that account because everything else is to follow suit. Remember, there's a governing plan. You're like, okay, let me hedge. I've got 7 trades buying. I need to find some sell-offs. Where's the market selling off? Right? And then you do just that. And what you'll notice over time is if you come back after 3 months, your account is doing exceptionally well. You start to break even. Don't even lock profits. Don't do it because there can be a big retracement, which markets are allowed to retrace. Markets are allowed to retrace. All your life, the reason why you fight retracement is because you don't like being dumped. No one likes being dumped. There are human relations in us. The rejection that you've gone through, the parents who don't love you or love us or whatever you've gone through your life, you bring that stuff to trading. Markets don't owe us jack. If you understand that, you will realize that you actually want a market to retrace against you. You want to do it in a very healthy way. You do that in a healthy way. You allow markets to breathe. When it goes down again, if you understand market structure that I've just taught, after a retracement, I want you to create a lower low, or I want you to create a higher high. Then I know I'm making more money. All it is sitting and waiting. This chart, the final chart I'm going to share with you, was not my analysis. It was an analysis by someone in the room. with you, Mr. Alvin. This is his platinum chart while you are still a student. I'm not so sure if Mr. Alvin took the trade or not. Platinum on the governing time frame has arrived exactly where Alvin thought it was going to arrive. Platinum has then, since then, I don't even know if Mr. Alvin himself checks up on his own chart, has since then just created a systematic moments of low, higher low, higher high, higher high, higher low. And it's been going up since then. Since the 21st of September, and I know I brought this up another time in the war, waiting for an entry. Good man, good man. I jumped in here, bullish engulfing pattern, used the 1 hour time frame. I just couldn't do it. I couldn't wait any longer because it was clear where price was going. So I know somewhere on the 1 hour time frame. Long story short, I took a good trade. I got in. And this is literally the results. I'm so proud to say one of my students gave me the signal. It was a clean signal, right? Markets came to this bullish engulfing pattern. You can see, however, that they didn't like the reasonable body, right? Actually, they did like the reasonable body. I just got in on the 1 hour time frame. All right, it's a clean, reasonable body take. Yeah, I broke a trend line and went up, and I'm going to come out here. Okay, that's it, right? Natural gas. I did videos on my natural gas on the social media tab. Price going up. That's it. Just hold. You make money by holding. You can make money trading intraday all the time. That's fine. Do that if that's what makes you happy, but you make money holding. Give me this. You've done the course. This is the end of the course. You finished the course. Tomorrow we're going to talk about indices. Just a couple of things to add outside of the supply and demand that you already know. But give me that. You owe that to yourself. Everything that you've gone through in your life to finally hold on to the very loose forex dream that has completely disillusioned so many people. You owe yourself that process. Go back to PDF 1 that I wrote for you, and where I showed you that you're going to go through this developmental cycle. You have the tools. Guys, we've been together since September. This was the longest intake because of the delays. I spent the most time with this group than any other group in general, and I'm happy with that. But now you need to be patient with yourself. Appreciate all of you. I see a lot of comments. People are saying fire. Thank you so much, Damden. I see you. This is the 365 way. Don't forget about overnight miracles. Go build. Go build. Good night, everybody. I appreciate you. I'll see you tomorrow. I'll see you tomorrow for our last class. Tomorrow is Wednesday, and then I hit the road. I'm going to East London Thursday, Friday, Saturday. Yeah, okay, right. Yeah, so I will be here tomorrow, right? So let's keep praying for no load shedding disruption. I appreciate all of you guys. Have been an amazing, phenomenal class. October, September, October, and now pretty much half of November we've been together. There is one more big PDF that I will have to put together. All right, I'm cognizant of that fact, that our last PDF was on my Trader's Edge for the weekly PDFs. So it will include everything up until this time. All right. So just, I need time to sit and write. Both in 3 years program, I'm going to make some supper, have some supper, probably take a nap, then I'll get up and then finish it. Right. So I've actually got my parabolic assets. Watch out. Everything that pumped, got quiet is about to pump again. We're in a different crypto cycle. So I'll be talking to you guys about that stuff. And I'll try and start getting that document circulating. Give me 48 hours, but it might be tomorrow. As long as I get up at 4 a.m., I should be good to go. Shake my hand, everybody. Have a good night. Thank you so much for being patient with me. Your recording will be uploaded, etc. Cheers, everybody. Good night. Goodbye.
Good night.
Thank you, sir. Thank you.